So my name is Daniel Tal. I'm a steward at ICHI, and we're going to talk about creating truly decentralized DeFi. I know that's decentralized twice, decentralized finance, but it's going to be really decentralized. So a little bit of background about me. I got into the space in 2016, looking into Bitcoin, the Bitcoin protocol, doing some research on scaling that, and that kind of torpedoed me into working at IBM, where I worked on product for the blockchain team there, focused on permissioned chains and private chains like Hyperledger Fabric, realized that that was not what made decentralized finance and blockchain so amazing, and decided to dive into the degen world of DeFi, Web 3.0, and all of that fun stuff. So let's, I don't know how many times you guys have raised your hand today, probably like 30, but we're going to do it again. So how many of you have heard of Web 3.0, blockchain? I'm assuming all of you guys. Raise of hands. Sweet. How many of you have heard of DeFi, decentralized finance? Okay, almost everyone. How about DAOs, decentralized autonomous organizations? Okay, a lot of people. How about ICHI? Oh, we got one. My mom is in the crowd, and she has heard of it. That's amazing. That's great. Cool. So let's dive into it. So what is ICHI? ICHI is a DAO, a decentralized autonomous organization. As a steward at ICHI, I am a part of the community governed by its token holders and members who stake and provide that liquidity to certain pools and to certain staking contracts. I want to separate that out, the governance aspect from the technology and product aspect. So we have this governance of the protocol and the price of the ICHI token itself. And on the other hand, what we have is our technology, which is really focused on building sustainable and community-controlled economies for DAOs. We're a B2B or DAO-to-DAO service that builds infrastructure for these different financial organizations in the blockchain space. Now, one of the big things and problems we see in the space is working with liquidity and making liquidity sustainable for all kinds of products. I've spoken to multiple different companies, DAOs, creators in the creator economy, and just listening to some of the panels today, I think it's pretty obvious that liquidity is really the lifeblood of these different organizations. It's really what lets you be able to build an organization or a DAO, and really what lets you keep and hold value to be able to trade assets across the market. And we realized through trying to create our own DAO that there are a lot of issues. There are a lot of problems people face when trying to build these communities. Specifically the fact that all projects create value through their tokens, but they have to sell that token in order to fund anything they do, right? Selling that token leads to downward trajectory of the price, hurting the project. So how do you continue to sustain value in your product, hold the price of your asset so that you can build and develop and pay people to actually work with you? And how do you do it in a safe and sustainable way where you can do it decentralized and hold that liquidity? So that's what we do at ICHI. We try to change that narrative. We give self-custody and decentralized market making so that different communities and projects can actually hold their token, use it as needed. We provide protocol owned liquidity, which is a buzzword that we've heard a lot in the space coming from companies like Olympus Pro and the Olympus DAO and a few others. And we really want to align the goals of the general DeFi audience, the communities, with the DAOs, the protocols themselves who are building all of these different types of technologies to enable decentralized finance today. The key is doing this in a way that doesn't sell your token, doesn't hurt your project. So how do we do it? 3 ways. We got our Angel Vaults, our HODL Vaults, and our branded dollars. Our Angel Vaults are a Uniswap v3 liquidity manager. That's a mouthful, but basically helping you manage concentrated liquidity on the Uniswap AMM. Doing it in a way where users can earn a lot of fees, but the protocol can actually only provide buy-side liquidity of their token so that it doesn't hurt their token. It doesn't sell their token on the open market. HODL Vaults are similar, but more focused on investors and protocol tokens themselves, depositing single-sided assets and being able, again, to start to hoard and earn yield specifically on your token. And then lastly, we have our branded dollars, which are basically a treasury management protocol that spits out branded dollars and enables you to do business operations on a daily basis. So let's hop into Angel Vaults first. So what are they? Again, Uniswap v3 managers, built for your projects and communities to align their incentives. It really does this through creating a smart way to concentrate liquidity. And what's so great about it is, one, it enables LPs to deposit one type of token, usually stable assets. And this comes up many times, right? When you're thinking about providing a liquidity position as a general DeFi user, you have to get 2 separate types of assets, 50-50, put them into a pool. In this case, you only need 1 asset. You don't need to start dealing with getting a mixture of 2. The second piece is it uses that stability and that stable asset to provide buy-side liquidity, or buyers of last resort. So it enables that stable asset to be held underneath the price of a native token and provide that buy-side liquidity for people who are looking to hold and basically depeg or decorrelize their asset from the general market. We see that a lot with on days where we're in bear markets, kind of like now, when Bitcoin dumps, when Ethereum dumps, we tend to see most altcoins following that path, right? So what this does is try to decorrelate that, right? For us at ICHI, when we first created our Angel Vault, we had between a 0.8 to 1 correlation with Ethereum. When we implemented this, it actually went down to 0.2 correlation ratio, which was awesome to see. And then, of course, this aligns your community incentives, because with concentrated liquidity on Uniswap v3, you're earning a lot of swap fees. You're getting rewards for your community, for these LP depositors. And at the same time, you're able to use that concentrated liquidity to protect the price of your native asset. And Protocol Owned Liquidity, which really enables projects to hold the liquidity that enables their market to be healthy, enables them to ensure that there's always a market for their token. So I won't get too technical with this, just a quick view of what it looks like. So what you're seeing is a picture of the liquidity page of a pool on Uniswap v3. Sorry about that. All these large bars are basically a bunch of stable asset liquidity. Stable asset liquidity, we can imagine being USDC, and the red column is the price of ICHI, which at this point is $5.67 in this picture, and everything to the right of that red marker is ICHI liquidity above the price. What this basically means is that if people start to sell out of ICHI, they need to go through that entire first bar of liquidity. I think this is a clicker. Oh, nice. So this first bar of liquidity, they have to go through that entire bar. They have to sell through that much liquidity in order to bring the ICHI price down a single tick. As opposed to in most markets and in most liquidity pools, you'll usually see some kind of pyramid because people try to concentrate liquidity around the price to earn those high fees. So this does it in a slightly different way, continues to earn those fees, but does it in a smart way to protect your native token price. This is a quick snapshot of the ICHI price in some of the dips we saw in January. You can see everything in red and ICHI in green. Everything here is in red, somewhere around 10 to 30% loss, and ICHI's around 3 to 4. So that decorrelation that we were talking about before. So that's a little bit about Angel Vaults. HODL Vaults are a little bit different, more focused on investors and protocols who have a lot of their specific token. It allows, again, single side deposits of that token that they have a lot of, but gives you the ability to earn from fees as well as take profit orders above the price of ICHI in this case. It allows for self-custody market making. And what I mean by that is, a lot of times when projects want to go to a centralized exchange, they'll provide a bunch of their tokens, and these market makers, and market makers will go provide this liquidity to these centralized exchanges, and then they end up selling your token and hurting your token price, if we're being honest, right? They're selling those on the open market. What we're doing is enabling you to be able to hold that liquidity position, decide when you want to put that liquidity in, pull it out. It's all in your back pocket. It's decentralized. And it gives you the ability to also earn on that, whereas in general, market makers will earn all of those fees and everything that's associated with that large deposit you're giving them. You get to earn them. And then lastly, you're getting the experience of Uni V2. So in Uniswap V2, you would just throw your money in there, you'd get liquidity LP tokens back, and you'd deposit and forget. In Uniswap V3, it's a little different. It's tougher, right? You need to concentrate that liquidity, you need to move it around, you need to focus on managing it. So that's what these HODL Vaults do, is manage that liquidity for you, deposit and forget, while earning you fees in the best possible way, and providing you the ability to really self-custody that market making for your token. They work pretty similarly to Angel Vaults. The main difference is you're taking a bunch of take profit orders over here that convert back into this wall of your own token. This is a pretty similar picture, but there are slight nuances to the way that strategy works. And we can get to questions after. I'm happy to explain a little bit more about that. And then our last but not least product is our DMAs, decentralized monetary authorities, or our branded dollars. So these are basically, I don't want to say the dirty word now, but stable coins. They are not algorithmic, they are over-collateralized, but the key is that the funds that are used to mint these lock in your native token, and more importantly, they give your community a treasury management system, a way for them to get a bunch of money, manage it in a decentralized way, earn yield on it, and pay back the depositors, the minters, right? The people who are helping you build this kind of community and create your economy for you. It also gives you this stable asset to let you do all kinds of daily business transactions, including paying for grants, paying for workers, paying for anything there is out there. So there's a lot of interesting ways you can use this. And probably the most interesting way is, boom, putting them together. Angel Vaults plus branded dollars equals good time. So gives you that ability for fungible liquidity, your own custodial market making, earns a lot from concentrated liquidity, and really gives you that fight against inflationary rewards, and builds protocol owned liquidity for your token and for your community. So that's about it. I know that was a mouthful. I'm super happy to take questions now. Also, I'll be here for questions after, since I know you guys are all probably starving. In either case, feel free to scan this QR code. It'll take you to all the info on ICHI. Email me, add me on Twitter, tweet me, Discord, Telegram, all that fun stuff. Add it, use it. It would be awesome to connect with you all. And yeah, thank you.